So bank charges, caretaker salaries for rented property, bad debts from tenant written off, tender advertisement for repair of rented property, income, interest income from office services, front office services for SAL. The SACCO intends to distribute 1 million shillings as dividends and bonuses required. Tax payable, if any, by Timao SACCO Limited for the year. So in this question, just like the one we did was November 2016, question 3, Jamboree SACCO, the examiner has not directed. So when he directs, he gives a hint. He says, start from there, adjusted profit. That was the first question we did, we called Sanie. We had been given a hint. So here we don't have a hint. So if there's no hint, then you have a choice. And to me, the easiest one would be to use the direct method, where you just put columns and you capture the information required and get the taxable income. So just like in November 2015, even this, we can use the direct method because the examiner did not specify, did not insist. He wanted us to use the adjusted profit method. So under the direct method, we just put columns and capture the information required. So the first column, we look for income items. Then in the second column, we look for amount probably in thousands of shillings. Then we'll get the proportions, which we discussed. So proportion taxable, and that should be able to give us the taxable. So we'll fill in those columns by looking at the income items and referring to the proportions we have discussed. So interest on development loans to members is included in loans, like interest on loans on members' loans. And we said that's exempt. The reason why we said it was exempted, the members are the contributors to the amounts that are being lent out, and we refer to that as a mutual transaction. You're transacting with yourself. So if you're transacting with yourself, it's not income. So income has to come from outside the farm, outside the company, from third parties. So interest or development loans to members is a mutual transaction, so it's exempted. Provision for bad debts is an expense. We will just particularly pick income items and not expense items. Expense items are irrelevant. Impairment loss on members' loans is also an expense. The first income is actually dividend from real estate investment trust. And they're saying dividends from real estate investment trust is net. So we need to convert to gross. Now, dividends from real estate investment trust, a real estate investment trust is a collective investment scheme. Others in the same group could be mutual funds, like those being managed by Old Mutual. In the past, withholding taxes, like now this one is net. Withholding taxes will be the final tax, but now they've changed the law. Even income from collective investment schemes is taxed twice. Even when you pay to the members, you still have to withhold tax for the second time. There's a withholding tax of 15%. And that includes even money markets. You know something about money markets. So funds put maybe as part of the investment of a group to earn them interest will still be treated likewise. So we will change dividend income from real estate into the gross amount. Withholding tax is 15%. So 100 minus 15, you're left with 85. So we'll divide 95 by 85. Then we multiply by 100 to get the gross amount. So this is dividend income. So we need the dividend gross. No, it's dividend, it's not interest. Dividend we cannot tax twice. For dividend withholding tax is final tax, you have to be consistent. This is dividend. I don't know why I thought it was interest. It is interest that is taxed twice, but they are saying this is dividend and by the collective investment scheme. So dividend withholding tax is final tax. Then interest on staff loans. Please notice, staff is different from members. These are employees. So this is actually income. Interest from staff loans is 154,000. So interest from staff loans is 184. We were not given a percentage for that. So this is part of what we have called other income. So whatever source you are not given, you just treat as other income. So other income is fully taxable. So bring in the 184 on staff loans. Then there is interest on salary transfers, probably for staff also. So interest on salary transfers, on salary transfers. Interest on salary transfers is 364. Again, we don't have a specific proportion for that. It's simply other income. Interest on salary transfers. The interest on bank deposits is 630. So we have interest on bank deposits. We shall assume this amount is gross. And this one you need 50%. So 50% should be 315. So that's the proportion for interest on bank deposits. Then you have interest on ATM withdrawals, we shall treat as other income. So interest from ATM. So we don't have a percentage for that. If you remember, we did not have. Rent income, will need to compute the net, if you recall. So I'll put a working note here. We look for net rental income. So the gross amount is given as 400. Then we lessen all the allowed expenses on rent income. So when you come across them, we'll deduct them. But in the meantime, we can run through the list. So the next item in the list is called members' election expenses, which is not relevant. Software purchase for computers used for in the rent of premises. So there is, we'll calculate the investment allowance on software. The software bought for rental premises is 600 there. So 600 will multiply by 25%. And 150 for software used for the rental business. Funeral expenses is not relevant. Repairs of rental property. Repairs of rental property is 36,800. So repairs 36.8. So that's repairs. Bank charges, caretaker salary for rental property is another 150. So we have caretaker salary, another 150. Bad debts from tenant written off. Bad debts from tenant written off is 42. So bad debts from tenant is 42. Then tender advertisement for repair of rented property. So tender advertisement for repair of rented property. Then this should give us the taxable income. Then there is interest from front office, of course, that's a different source. So you can get the taxable income. So rental umepata net ni ngapi? 1.2. So 1.2. So bring it here in this schedule. You see rental income. This must be the net amount, 1.2, and we said 100% of 1.2 is 1.2. Then they also have interest income from front office services or FOSA of 170. So interest income of FOSA. Another 170 is simply other income. So this gives us the total taxable income. So that will give us the total taxable income. So this gives us 1124.2. And they want a tax, we see corporation tax. Corporation tax liability will be 30%. So lesson withholding tax, and withholding tax should be only on interest on bank deposits. Interest in bank deposits. So withholding tax is 15%. 15% of 315,000. This will give us corporation tax payable. So that was an assignment question. And cooperative societies. So we are done with cooperative societies. Then there was one other question under leasing. I've given as an assignment, but we did not remember to go through, and it's in September 2021. September 2021 is a higher purchase question. September 2021, question 3B, I think. September 2021, question 3B. We had actually completed leasing, so this was an assignment question, but we did not go through it. So the question is September 2021. September 2021, question 3B. It's called Credit Lenders Limited. So it's called Credit Lenders Limited. So the question reads, the following information was presented to you by management of Credit Lenders Limited as at 31st December. The company deals in the sale of manufacturing machines on hire purchase terms. The company purchases the machines at 600,000 each. The hire purchase price per unit comprises of a deposit of 160,000 and 8 quarterly installments of 80,000 each. Cash price per unit is 700,000. During the year ended, the company sold 4,080 manufacturing machines, of which collections of 569,600,000 were received at year end. Or during the year, the company repossessed 80 machines, which had been sold early in the year. The customer had already paid 6,400,000 on the units, which was included in the total cash collections. For the year, the repossessed units were valued at 520,000 each at the year end. Expenses incurred in the course of the year included rent expenses, legal expenses of 1,200,000, of which 320 was in respect of defense against illegal importation of a machine, advertising and marketing, salaries and management expenses, purchase of mobile forklift in August. Other expenses, other incomes included royalties, net of withholding tax, dividend from Uzima Cooperative Society, 120,000 net of withholding tax. The Revenue Authority has reached an agreement with the company, whereby profit for tax purposes will be determined on the basis of proportionate cash collected from the customers for the year sales, required taxable profit or loss for credit lenders for the year. So we'll prepare a statement for taxable profit or loss. So this will have purchase part of leasing. So all sales are on hire purchase terms. We can be able to get the total HP sales by looking at note 2 and note 3. Note 3 will give us the units. Note 2 will give us the HP selling price. So note 3 says during the year, the company sold 4,008. So those are the units. Manufacturing machines, of which collections were 569,600. So the units are 4,080, but the hire purchase price is given in note 2. The HP price per unit comprises, you deposit 160, and then you pay 8 other installments of 80,000 each. Forget about the cash price. So 80 times 8 should be 640. 640, you add 160, you get 800. Is the hire purchase price. So deposit of 160, then there are 8 installments of 80,000 each. So 80 times 8 is 640 plus 160. You get the HP price was 800. So we can get HP sales. So HP sales would be 4080 units. You multiply by 800. So 800 is the HP price. So that gives us 3,264,000. So 3,264,000. So, but out of that total sales, they repossessed some units. So the units repossessed are in note number 4. They say during the year the company repossessed 80 units which have been sold earlier in the year. So we may want to deduct the repossessed units so that we'll later on work out the profit or loss on the repossessed units separately. So we are going to sell that repossessed units. So they repossessed 80 units, and the 80 units have been sold at 800. So this looks like 64,000. So this to deduct the repossessed units, so that you only work with the units that were with the customers, but we'll work out the profit or loss on repossessions separately. So this will prepare profit and loss for the units that are with the customers. So we say there's cost of goods. Cost of goods sold. So we are not given opening stock, but we'll take it, or we'll assume that the 4,080 that were sold are the same that were purchased, so we can bring in purchases of the same unit, 4080, but we've been given the costs, the purchase price in note 1. The company purchased the machines at 600. So the purchase cost is at 600. So you can get the costs of the 48 units. This will give us 2,448,000. Then we can say the closing stock is the 80 units that have been repossessed, and the valuation has been provided. You get the valuation at the end of note 4. The last sentence says the repossessed units were valued at 520 each. That is the valuation. So say less repossessed stock. So when it was brought back, it was 80, but the valuation reduced to 520. So that deduct 41,600. So the difference should give us cost of goods sold. So I presume you get something like that, 793, 600, and you call that the gross profit. So with that, we can be able also to work out the 80 units separately, see whether there was any additional profit we can add to the gross profit or loss. And for that, probably we can have a working note here. And we look for profit or loss on the possessed stock. For that, we'll open a T account for repossessed stock. We'll open a repossessed stock account. So we are looking for profit or loss on the units, the 80 units. First of all, the opening balance in that account will be the cost of the 80 units. So say our balance brought down. So our balance brought down would be the 80 units, but what was the cost? The cost was 600. So that's 48,000. So that was the cost of the units, 48,000. But then note 4 will give us more information on Asama. The second sentence, the customer had already paid 6,400,000 on the item. So that's cash we have received. So you debit bank and you credit here. So cash book or bank, they have received 6,400,000. So that was cash they have received on the 80 units. 6,400,000. Then when the stock came, it was valued at 520. So we have a balance carried down at the end of the year. The same 80, but now valued at 520. It was valued, the stock was valued at 520, which gave us 41,600. So the account balances, the company has not lost anything. Neither have they made any profit. It's just the cost. There's no profit on the 48. So we're on the 80 units and there's no loss. So there'll be no entry for the 80 going forward. So we'll just want to deduct allowable expenses. So there's no gain, so we'll say less allowable expenses. So the allowable expenses are in note 5, like rent expenses. We'll charge rent expenses. So we have rent expenses of 420. Then legal expenses, 1,200,000 of which 320 was in respect of defense against illegal importation of machines. So 320 is a penalty, will disallow that. So legal expenses will have 1.2, but we are going to disallow the 320. So we are left with 880, hopefully. Yes. Advertising and marketing is allowable. So advertising. Advertising and marketing is 525. Salaries and management expenses is allowable. Management expenses. So salaries and management expenses is 890. Purchase of mobile forklift, we can claim an allowance on that. So these are mobile forklift. So comes under the category of motor vehicles, so we get 25% of 2.8 is 700. Then there is one more thing we need to consider, and that's note 7. Note 7 says the revenue authority has reached an agreement with the company whereby profit for tax purposes will be determined on the basis of proportionate cash collected from the customers for the year's sales. So if profit is determined on the basis of proportionate cash collected from customers, then it implies, that sentence implies that if I can get the cash that was not collected as a proportion of the sales, I can expense. Because what the revenue authority wants is the proportionate of cash collected from customers for the year sales, that's taxable. Then if you turn the sentence around kidogo, it implies that the same proportion now, but of cash uncollected, that should be an expense. Because income is proportionate of cash collected, but we don't have cash uncollected, so we have to make a note and look for uncollected cash. So that uncollected cash can help us to calculate the proportion which we can expense as unrealized profit. So to get uncollected cash, we have to look for, we have to prepare HP debtors account, because everything was sold on hire purchase terms. So we are looking for uncollected cash. So we'll debit in this account the total sales for the year, HP sales for the year. So HP sales for the year is here, 3,264,000. That was the sales for the year. Out of that sales, some cash was received. The cash that was received is at the end of note 3, collections of 569,600,000. So we'll assume this amount was banked. So cash flow, they banked 569,600. That was banked. Then out of the repossessed unit, the 80, there'll be bad debts. There's some amount that will never be received. And the reason why it's never going to be received is because the goods are already repossessed. They are not with the customers. So you cannot expect the payment. So we get the total sales that were repossessed. The 80 units at 800 had given us 64,000. So the 80 units was valued at 64,000. Out of that, the only cash a customer had paid is 6,400, it was 6,400,000 in note 4. So out of that total amount, they only received 6,400,000. And then the goods were repossessed. So the rest will be bad debts because we are not in a position to collect because the goods are already back in the company. So take 64,000. From there, we subtract 6,400. That is all that was received. So 57. 600 is bad debt. The balancing figure is uncollected cash. Uncollected cash will simply be the balance. The balancing item in the account will give us the uncollected cash. So you can get that by balancing up this account. So this is the figure for uncollected cash. 2,636,800. That's the cash that is still out to the customers, which they are hoping to collect. So we can use that to calculate as a percentage of sales to give us unrealized profit, which we can charge in the income statement. Then, most definitely, whatever is left is what the revenue authority wanted. So we can get unrealized profit. So our unrealized profit figure would be uncollected cash, 2636,800. We divide by the total sales as a proportion of sales, 3264,000. Then we multiply that by the gross profit, 693,600. So our unrealized profit figure is 641, 104, 3. So that will charge in the income statement, and we say unrealized profit. So 641, 104, 3. So that should give us income from hire purchase only. So just from trading, then we can look for others. So these were taxable profit from trading in hire purchase. There are other sources of income. So the other sources of income are given at the bottom of the question. So we also consider other sources of income. Note 6, other incomes included royalties of 289,750 net of the withholding tax. The rate of the withholding tax on royalties is 5%. So what you have there is 95. So you can convert into gross. So you'll say royalties or royalty income. So royalty income, you have 289.75, 289. Okay, we want the gross amount. To get the gross amount, you take 289. The figure we've been given, 0.75, I'll divide by 95, because this is 95% if they say net, because the rate of withholding tax is 5%, so 100 minus 5, you're left with 95. Then you multiply by 100 to get the initial amount. This will give us 305. That's the gross royalty income. The other income they have is dividend from Uzima Cooperative Society, 120,000 net of withholding tax. So it's from a cooperative, not a software. So dividend from a cooperative is taxed twice. The withholding tax is at the rate of 15%. So if they say net, what we have there is equivalent to 85%, 100 minus 15. So dividends from Uzima. Again, we need the amount gross. Dividend from Uzima Corp. Kama ingekuwa SACCO, SACCO is a limited company. This is a farmers cooperative society. So you take 120, which is equivalent to 85%, you multiply by 100. 85 because withholding tax is 15%. So 120 divided by 55, you multiply by 100. And you get 141. 176. This should give us the total taxable income. So this gives us 159, 526, 0.876 as the total taxable income. The examiner did not want tax. But of course, if you had wanted tax, you'd get corporation tax liability, and then you'd subtract the withholding taxes on royalty. We say 5% of 305,000, when the rate is 5%. Then for dividend, you'd have said 15% of 141, 176. You subtract from whatever corporation tax you get there, then you get the taxpayer. The examiner did not want tax. So this was an assignment question on leasing. We are done with leasing. We are also done with cooperative society. So I was going to introduce a new topic, and that's banking. When you take a break, so after the break, we can introduce the new topic called banking institutions. So let's introduce that after the short break, some 10 minutes. Okay, so our next topic is banking institutions. So we look at banking. Banking institutions. Then you say a bank is a financial institution. A bank is a financial institution. A bank is a financial institution which performs the function of financial intermediation. A bank is a financial institution which performs the function of financial intermediation, which performs the function of financial intermediation. Then you say this is the process. This is the process of connecting. This is the process of connecting. This is the process of connecting a party that needs capital. This is the process of connecting a party that needs capital to those who can provide. To those who can provide that capital. To those who can provide that capital. To those who can provide that capital. You see, a bank can achieve this function. A bank can achieve this function. A bank can achieve this function by collecting deposits. A bank can achieve this function by collecting deposits. A bank can achieve this function by collecting deposits from the public, by collecting deposits from the public. For lending to the investing public. For lending to the investing public. For lending to the investing public. To perform banking operations, to perform banking operations, a bank must obtain a license. To perform banking operations, a bank must obtain a license from the regulatory authority, or in brackets CBK, from the regulatory authority in brackets CBK, in accordance with the Banking Act, in accordance with the Banking Act, in accordance with the Banking Act. So you say, normally, a bank has very unique items. Normally, a bank has very unique items of income and expenditure. Normally, a bank has very unique items of income and expenditure. Normally, a bank has very unique items of income and expenditure, which include the following. Which include the following. Which include the following. A, placement, deposits, deposits and balances, placement, deposits and balances due from other banks, placement, deposits and balances due from other banks, placement, deposits and balances due from other banks, and financial institutions, Then you say, this refers to money. Refers to money or lending to other banks. This refers to money or lending to other banks and financial institutions. This refers to money or lending to other banks and financial institutions, or overnight lending, which can be withdrawn on demand, or at very short notice, Next point, the interest derived from placement. Deposits and balances. The interest derived from placement, deposits and balances. The interest derived from placement, deposits and balances is taxable business income. Then B, interest on government securities. So we say banks usually invest in government treasury bills. And bonds. The interest income derived from treasury bills and bonds. Is taxable income. Then C, interests not interest. That's something different. Anyway, let's just put that one. C, interest on advances to customers. So we say advances to customers include loans. Overdrafts, or any other advances, the interest income derived by the bank, on advances to customers. The interest income derived by the bank on advances to customers. Is taxable business income. Then D, rebate on bills discounted. rebate on bills discounted, rebate on bills discounted, or unexpired discounts, or unexpired discounts, or unexpired discounts. So say this item represents an earned. This item represents an earned discounts. This item represents an earned discounts. This item represents an earned discounts on bills discounted to maturity. This item represents an earned discounts on bills discounted to maturity. This item represents an earned discounts on bills discounted to maturity after the year end. On these bills discounted to maturity after the year end. So you say rebates on bills discounted, rebates on bills discounted shall be excluded. Rebates on bills discounted shall be excluded from income. Shall be excluded from income of any year. Shall be excluded from income of any year. Then E, interest paid on customers' deposits. 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 So you say this item represents the amounts owing. This item represents the amounts owing by the bank. This item represents the amounts owing by the bank to its customers. This item represents the amounts owing by the bank to its customers on deposits. On deposits such as savings. On deposits such as savings. On deposits such as savings. On fixed deposit accounts. On deposits such as savings or fixed deposit accounts. Then we say the interest paid to the customers, the interest paid to the customers on their deposits, the interest paid to the customers on their deposits is treated as allowable expense. Is treated as allowable expense for tax purposes. Is treated as allowable expense for tax purposes. Then one last point, a new paragraph is saying, where a bank has a permanent establishment in Kenya, where a bank has a permanent establishment in Kenya, where a bank has a permanent establishment in Kenya and is holding deposits and is holding deposits, assets or property, and is holding deposits, assets or property acquired from its operations in Kenya, acquired from its operations in Kenya, acquired from its operations in Kenya, outside the country, outside the country, outside the country, Any profits or gains derived from such deposits, any gains or profits derived from such deposits, assets or property, any gains or profits derived from such deposits, assets or property shall be treated as income. Shall be treated as income chargeable to tax in Kenya. Shall be treated as income chargeable to tax in Kenya. Shall be treated as income chargeable to tax in Kenya. So that is banking, as brief as that. Unless there's any question on banking. So we'll start with the last question they examined in banking was still in September 2021, question 5B. September 2021, question 5D must be on page 27. It's called Alemao Bank. September 2021, question 5B is on page 27. That was the last time they brought banking. So September 2021, question 5B is called Alemao Bank. It reads as follows. The following information was obtained from the financial records of Alemao Commercial Bank Limited for the year ended. So interest on advances, contribution to deposit protection fund, operating lease rentals, interest on government securities, interest paid on deposits, interest on placement in bank balances, loss on disposal of collaterals, fees and commission, expenses, losses from investment in securities, purchase of equipment, depreciation, transfer to statutory reserves, losses on stock brokerage dealings, gain on foreign exchange dealings, discounts on bills purchased, auditors' remuneration, provision for bad and doubtful debts, investment in government securities, bills, receivable and for collection, guarantees and performance bonds, interest accrued and paid, bills for collection, acceptances and endorsements, rebates on bills discounted, provision for taxation, general charges recovered, commission on exchange and brokerage, additional information, contribution to deposit protection fund includes investment reservation surplus, included in transfer to statutory reserves is an amount paid for exchange and commission of 72,000, discounts on bills purchased, included interest and discount paid of 58,500. Provision for bad and doubtful debts includes specific bad debts at the beginning and at the end of the year amounting to 102 and 210,000 respectively. The corporate tax rate applicable during the year was released 30%, required a statement showing the taxable profit or loss for the Alemao Commercial Bank for the year, and then tax payable or refundable by the bank. So this is one way a banking question can come. So if you're given a list of items, then the examiner would want you to identify what are the incomes Then what are the allowable expenses out of the list given? So this is one way an exam question can be brought from banking. Of course, the other way is where you'd be given a statement and you adjust. So this is September. So get the income items, and then we'll simply deduct the allowable expenses. So what are our incomes? The first one is right there. We are told there is interest on advances. So what they're given to customers that earn them interest. So as you bring them in, you also must be careful in case there's any adjustments to make. Now, interest on advances is 672,200, and I don't think there's any adjustment relating to that. So the first income here is interest. So interest on advances. And interest on advances is 697. 200. $697,200. Contribution to deposit protection fund. That's an expense. We are looking for income. So operating lease, rentals, interest on government securities is an income, yes. Investment, but we leave that for now because it must be having its own expense. It needs to be worked separately. Interest paid on deposits is an expense. Interest on placement is an income. What we had called overnight lending. Interest on placement and bank balances should be 39.90. So interest on placement. And bank balances. $39.90. Loss on disposal of collaterals is an expense. Fees and commission expenses. Losses from investment in securities. That should be the expense to go with interest on government securities, losses on investment in securities. So we can bring in this income by offsetting. You can say interest on government. Interest on government securities, interest on government securities is 21,900. 21,900. We'll subtract this loss from investment, 1185. So that the rest is taxable income. And we get 20. 715. Then you have interest paid on deposits. Interest paid on deposits is an expense, or we did placement. Loss on disposal of collateral is an expense. Fees and commission expenses, losses from investment in securities, purchase of equipment, depreciation, transfer to statutory reserves, losses on stockbrokerage dealing. Then there's gain on foreign exchange. Gain on foreign exchange dealings, that's a taxable income. That's part of gain on. So gain on foreign exchange dealings, discounts on bills purchased. Yes, even that one is an income. Yeah? So discounts on bills purchased as a note. Look at note 3. It says discounts on bills purchased include interest and discounts paid of how much? 58,500. So we'll say discounts on bills purchased. So you'll get the amount of discount, 493.5. 493.5 will subtract 50.5. So that's discounts, auditors' remuneration, provision for bad and doubtful debts, investment in government securities, that's a balance sheet item. Those are simply balances. Bills receivable and for collection is also for statement of financial position. Guarantees and performance bonds, the same. Interest accrued and paid is an expense. Bills for collection, acceptances and endorsements, that's a balance sheet item. Rebate on bills discounted, we said the item represents an earned income which should be excluded from the income statement. Provision for taxation, there is general charges recovered of 375. We'll have general charges recovered. General charges recovered of 375. Commission on exchange and brokerage is also an income. The commission on exchange. So the bank does this. Commission on exchange and brokerage. 1176. So that will give us total income. Then we look for allowable expenses. We only deduct the allowable expenses. So again, starting from the top, there is contribution to deposit protection fund. Deposit protection fund changed its name. Right now it's called Kenya Insurance Corporation. So all banks are required by the law to make contributions to this fund. It's supposed to compensate account holders in case the bank suddenly closes or collapses. But there's an adjustment in note 1. Contribution to deposit protection fund includes investment revaluation surplus. So that's a balance sheet item. So we say contribution to deposit protection fund needs adjustment. So we'll adjust this. 147,000. We subtract this amount, this adjustment of 972. The difference is an expense. Contribution, operating lease rentals. Operating lease rentals is 97. Interest on government securities. Interest paid on deposits. So interest paid on deposits is 7110. Loss on disposal of collaterals. So loss on disposal. So loss on disposal of collaterals is 1260. Loss on disposal of collateral, fees and commission expenses. Fees and commission expenses is 21,000. Purchase of equipment, we can get investment allowance. On equipment. So purchase of equipment is 1,800. Allowance on equipment is just 10%. Depreciation is not allowable. Transfer to statutory reserves includes a note. There is note 2. Included in transfer to statutory reserves is an amount paid for exchange and commission. So there is exchange and commission paid. Exchange and commission paid. Losses on stock brokerage dealings. Losses on stock brokerage dealings is 522. Auditors remuneration. Auditors remuneration is 1179. Provision for bad and doubtful debts as a note 4. Provision for bad and doubtful debts includes specific bad debts at beginning and at the end of the year. So we have bad debts. So we are specific. At the end of the year, the specific bad debts amount to 210. At the beginning, it's 102. So the difference is bad debt. That should be 108. Specific bad debts. Investment in government securities, bills receivable, guarantees, interest accrued and paid is 2961. Interest accrued and paid is 2961. Bills for collection, acceptances, and endorsements. Rebates, provision for taxation is not allowable. General charges recovered, commission on exchange and brokerage. And I think we are done. There's no other cost. So we add the total income, the total allowable expenses, and we are done. Then the examiner wants to creation tax. It will be 30%. Then you must lessen withholding tax on interest on government securities. So withholding tax will be on interest. So you get withholding tax on the gross amount. The gross was 21,900,000. The rate is 15%. So we'll deduct 3 million. 285. So we deduct 3,285,000 from 166. 447. 800. So that would be our final amount. So there's another banking question which you can try as an assignment. It's May 2021. Just the next page, May 2021, question 1C. Question 1C is called Maendeleo. You can try that as an assignment. Otherwise, unless there's a question pending, I think we are done for today. So in the next class, we will go through that and maybe start another topic.
Erimo, nimekuuliza swali. Kwa nini haushikangi vitu ama ni nini? What's the problem? Hmm? Si nimekuuliza kama maji inaingia pale nje. Umeangalia? Alafu? So did you give me a feedback?